and it shows up in every single market cycle. Is it better to buy a cryptocurrency before it gets publicly listed, or should you wait until it launches and the market starts deciding its real value? This debate has become very relevant again as investors compare newly launched projects like MON, known as MON, with still waiting for their first. Some people believe the biggest opportunities are always before launch, while others believe waiting for a live market is safer and more logical. So in this video, we're going to break down both sides in detail. What actually matters more, timing or certainty?
This video is for educational purposes only and is advice. Always do your own research before making any investment decisions.
One of the most important ideas in crypto is something called price discovery. Whenever a new token launches, the market immediately starts deciding what that asset is worth. Before launch, prices are usually set in presales or early funding rounds. But once the token goes public, thousands of buyers and sellers start interacting in real time. This creates a constant battle between supply. Some traders believe the project is undervalued and start buying aggressively, while others take profits and sell. The result is a constantly changing price until the market reaches a temporary balance. This is exactly why new launches attract so much attention. Once a token starts trading publicly, investors finally get access to real data instead of just promises. They can observe trading volume, market sentiment, support and resistance levels, and how the community reacts under real conditions. This is one of the biggest reasons why many investors prefer to enter after launch instead of before it. They believe real market behavior gives them more clarity and reduces uncertainty, even if it means missing the earliest entry.
A good example of this is MON.
Since MONAD is already publicly traded, investors can analyze a live chart and see how the market is reacting in real time. Every buy and sell order contributes to situation. For some investors, this transparency is a big advantage. They prefer to see actual market behavior before committing capital instead of relying on speculation. Even though they are entering later in the cycle, they feel the data helps them make more informed decisions. However, side of the story that attracts a completely different type of investor. Many people believe the biggest gains often happen before a project ever reaches public exchanges. Their reasoning is simple. Once a token launches and gets attention, a large part of the early opportunity may already be gone. Early participants in presales often enter at much lower levels and position themselves before the broader market discovers the project. If the project grows after launch, those early buyers can benefit significantly.
This is why presale projects continue to get so much attention. During a presale, investors are essentially making decisions before the market fully values the project. Supporters see this as an opportunity to get ahead. Critics, however, see it as higher risk because so many unknowns still exist. Both sides are correct in different ways. Presales can deliver very strong returns if the project succeeds, but they can also fail completely if expectations are not met. The biggest mistake many new investors make is assuming that a low price automatically means a good opportunity. This is one of the most dangerous misconceptions in crypto. A token trading at 2 cents is not automatically cheap. What really matters is total valuation, token supply, utility, adoption, and long-term demand. A project can be cheap on price, but still be at value. At the same time, a higher priced token can still have more growth potential if it is early in adoption. Another important factor is risk. Every investment sits somewhere on a risk scale. Publicly traded tokens usually provide more information and transparency. Investors can study real price action and market behavior. Presale projects, on the other hand, come with much higher uncertainty because many things are still unknown. Will the team deliver? Will the roadmap be completed? Will exchanges list the token? Will demand continue after launch? These are questions that cannot be fully answered in advance. This is why research matters more than hype.
Many investors spend more time following social media trends than actually studying the fundamentals of a project. They get attracted to excitement instead of logic. In reality, successful investing is not about chasing hype. It is about understanding what a project is trying to solve, whether it has real demand, and whether the team can actually execute its vision. Marketing can bring attention, but long-term success usually depends on real utility and development.
Market psychology also plays a huge role in crypto.
During bullish periods, almost every project winner. People see stories of 100%, 500%, or even 1,000% gains and assume those results are normal. What they often forget is that for every success story, there are many projects that fail or disappear. This is why experienced investors focus on probabilities, not emotions. They understand that protecting capital is just as important as growing it. Timing is another key factor. Some investors prefer waiting for confirmation before entering a trade. They accept slightly lower upside in exchange for more certainty. Others prefer entering early, accepting higher risk for potentially higher rewards. Neither approach is perfect. Both can work depending on the investor's strategy, discipline, and understanding of risk. As the crypto market continues to evolve, this debate between pre-launch and post-launch investing will never really disappear. New projects will always come, new narratives will always form, and new opportunities will always attract attention. But the core question remains the same. Do you want more information and less risk, or more uncertainty and potentially higher reward? Every investor has to decide that for themselves. To summarize everything, MON represents a project that is already in public price discovery near 2 cents, where investors can analyze real market behavior and sentiment. On the other hand, presale projects represent early-stage opportunities where investors enter before public valuation, but with significantly higher uncertainty. Neither approach guarantees success or failure. The most important thing is understanding what you are investing in, managing your risk properly, and avoiding emotional decisions driven by hype. Thank you for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications for more crypto. And as always, this